You're listening to the RE Social Podcast with your hosts, Andrew and Vince from OnV Invest. For more information, go to onvinvest.com.
What's up, guys? Welcome to another episode of RE Social Podcast. Today we have a good, super special guest. Actually, we met at Limitless Expo with Ken and Tal Yarber in Arizona. Welcome to the show, Erica.
Thank you, Vince. Thank you, Andrew. Thanks for having me.
Yeah, so for people who don't know who you are, do you want to, we usually do like a 90-second intro for the listeners. Do you want to give a 90-second intro? I know you have a lot going on, but.
I have a lot going on, but most importantly, I guess what's important to me is I'm a mom, a wife of 23 years, and obviously a real estate investor. And so I met you at Limitless in line to see Robert Kiyosaki, who changed my life. Read the book Rich Dad Poor Dad, and just my whole mindset shifted from there and became so interested in real estate investing that I just went down every rabbit hole, just like you guys did when you first started. I was a young entrepreneur as well, like you, Andrew. I did not sell pictures at the age of 5 because I cannot draw a stick figure.
Mm-hmm.
However, I always had in my mind that I was going to run my own business. My dad always told me that you can have a regular job and you can go and make a W-2, but you're never going to get wealthy unless you find something you love, be passionate about it, and you'll be good at it.
Yeah.
And Vince, that's one of your quotes as well. And when I heard on one of your podcasts, you say that, I was like, it's totally what my dad taught me when I was little. And so I just became obsessed with real estate and learning how to help people really passionate. What I'm passionate about with the real estate though, is helping people find affordable housing. Like, it's not just about making that dollar in real estate. It's not just about making that dollar in self-storage, but helping people maybe get rid of their things, live affordably, get out of debt, save up for their first home, and really find that financial freedom, which I think is true financial freedom. So yes, it's a dual win-win there.
Mm-hmm.
So how many hats do you wear? I wear quite a few myself. Are you a realtor, coach, investor? Let's go down that list.
Oh my goodness. Well, so I started out in network marketing. So I have a marketing background, and with that, it just kind of layers upon layers of things just kind of came to me. And, I think I probably have entrepreneurial ADD because I go and I do something and I just go and I be the teacher. When I wanted to learn how to do yoga, I didn't just go to a class. I became a teacher before I even knew how to do yoga. I wanted to write my own insurance policy so I could bank myself, like do infinite banking. So I became an insurance producer. So that's 2 of my hats, right? Most importantly, being a mom of a 16-year-old boy, that's the most challenging hat that I wear out of everything that I do. And then I manage all my properties. So that's why I went to Limitless, because I'm like, I need to get rid of some of these hats because it's just becoming too much for me to manage with 199 doors.
That's a lot of doors to manage. Holy cow. What do you mean you're managing yourself? Let's open that up.
Fortunately, they're not that difficult to manage. So I have self-storage facility too.
It's a self-storage facility.
Some of them. One of them is, yeah.
How many are like units where there's like tenants in there for like 6 months to a year leases? How many units is that?
I'm on a month-to-month basis with my properties.
Got it.
I always do it month-to-month just because it's like, well, what if I don't like it? What if they don't like it? I don't want to block them. I don't want someone to be there if they don't want to be there.
Yeah, that's fair. Okay.
There's stuff too.
Does that make it a little bit more active for you as a manager, or?
No. It just depends on your market. So some of your listeners, their demographic and their market, yes, it would be more challenging. I'm in Austin, Texas, so it's a little bit easier because of the housing that's here and the cost of living. So once I get people in there into those mobile home parks, which is kind of what they are, but a lot of people have tiny homes, RVs. It's not just, mobile homes that are in there. People stay. I have one tenant that's been in there over 37 years.
Wow. And so you've been managing your own properties this whole time. Have you found a good property manager that you trust? Have you taken that leap, or are you still managing?
My husband.
Yeah, nice. That's always nice. Yeah.
Yeah.
Does he have like owner stake and equity and all that? I'm assuming, or
No.
no?
He just works for free, dude. That's the deal she gave him. Yeah.
You got it set up.
He has it made though. He's great.
Nice. That's really great.
I mean, if you're married for 23 years, I don't think you need any more stake. I think
much is anyway. Yeah.
It's the same. Yeah.
And honestly, I could have it all. I could live in a tent. I don't really do this for the money.
Yeah. You like affordable housing, you said, right?
I love to help people. That's why I have this financial aspect to my business as well, where I help people. You know, if their goal is to buy a home, then there's a financial plan to do that.
Okay. Yeah,
my first investment I bought with none of my own money.
Mm-hmm.
Wow, you raised capital right out the gate.
Yeah, gave up equity.
Sure.
So how did you do that deal?
Tell us about your first deal. Let's break it open.
Well, I guess my first deal was back in 2002. I kind of started buying back then, but I didn't really know what I was doing I didn't know I was doing real estate back then, because I'd buy something, have it for a few years and sell it for double. I've actually probably sold over 400 Airstream travel trailers in the last 23 years. Do you know what Airstreams are?
Yep. Mm-hmm. Like the big dog of those trailer thingies, right? They put on cars and move them. Yeah.
Silver. Yeah. So that was kind of my first little, I still do that. I love doing that. Like I buy them. I love selling them. They're so much fun because they're nostalgic and they're just, timeless classic. But the big deal that I did in 2015, one of my first huge deals, was I actually moved to Austin. My husband and I, we said, we're going to move to Austin. We closed the doors on a business that we had. We've never gotten a W-2. We've never been W-2 people. So we've always worked for ourselves. Even though we both have college degrees, we've always just been entrepreneurs. And I got into network marketing in 2013. I still have that team, still have that company that I'm with, love the product. And it provided us a way to just shut the doors on our business. We just screen printing doors, shut it, left, moved to Austin, moved into a trailer park. We were living on about 1% of our income. The rent there was about $420 a month, $420 to $500, including bills. And I read Rich Dad Poor Dad. And in that book, he talked about network marketing. He talked about mobile home parks. And this basically was a mobile home park. I was like, I need to buy this place. And it was like December of 2014. By August of 2015, I closed on that property. It wasn't as easy as that sounds. Like, it was not like, oh, just go buy it. Yeah, we were making a lot of money, but I didn't have $375,000 just sitting there. I didn't have it. I had some, but I didn't have all of it. And I really didn't know how to go out and buy a property like that with bringing other people in on the deal. About 9 times I went and asked banks. I showed them the numbers. The numbers won't work. The loan to value is not right. What if people move out? Like all these things, people are like, it's not going to work. And finally, I met with a guy and said, you need to talk to my old landlord. And so I got on the phone with this guy. I told him the deal. And he said, let's do it. And so I had about $10,000 earnest money that was going hard the next day after I got his yes. So I let my earnest money go hard. I had done the contract. My name were assigned, and just gave up 50% ownership in this deal. And that was 7 years ago. And I'm selling that property. We close in December, and we 10x our money. So 40 years worth of income. It's going to be 300 apartments, and moving on to the next deal.
Oh, that's awesome. So tell me again how you structured the deal. You raised all the capital and you gave away 50% of the equity?
2 partners at 25%. They put up the down payment. We created an entity.
Sure.
And they signed on the loan. So I had no debt and no money out of pocket, but owned 50% of the company.
So you did all the work and the management, right?
Yeah.
Yeah, very, very typical.
Found the deal.
Yep. Found it, Well, yeah.
And what was the equity raise for that deal? Well, like what was the price and how much did you raise, including the rehab and stuff?
Well, down payment was only it was 375,000, and
Uh-huh.
1.5 million. The property was 1.5 million, and we closed on it in 30 days. So it was a real quick turnaround, and that was.
And then did you have to raise any money to do the rehabs and stuff like that, or no?
No, I didn't do anything.
It was up and running already.
Bought it at around a 3 cap.
Uh-huh.
Got the rents up. Got it operated at a 10 cap for the last 7 years. We've been operating that well. It's been great, and now we're selling at a 2 cap.
You bought? Wait, is this a? Did you say this was a trailer or no? Trailer park? Or
Yes,
no?
it was a mobile home park.
Mobile home park was selling at a 3 cap in 2014 in Austin. What's going on?
Yeah, it wasn't a good deal. Like, people thought it wasn't a good deal, but the same owner was 90 years old. He'd had this. Some people were paying $275 a month in rent across the street. They were paying $600 just across the street. So it was pretty easy to get those rents up within the first year. I had it up and running.
I see. So the assets was the 3 cap, but actually the market, if you do the market rent analysis, it was probably be 5, 6, 7 cap.
Nice.
Probably, yeah. Yeah, okay. It was, I mean, $175 was one person that was paying in there in 2014. And that was, well, they paid their own electricity, but it was,
And do you own just the land, Erica, or do you own those units as well?
It's always nice to have some units, I think, because of the cost segregation, and you can depreciate. But you can still depreciate some of the improvements that are on the property. I personally think there's a trade out there, because you can own those things, but then you're also fixing toilets and air conditioners in the middle of the night, which is not something I want to do. I owned one unit in there, and I rented it out for $1,000 a month for 4 years. I paid $4,000 for the unit, rented it out. And then when I went to sell it, so I paid like $48,000 off of it in the last 4 years, and then sold it for $9,000.
Wow.
I don't recommend doing that, but I had a great tenant and it was awesome.
To buy something for $4,000 that generates $1,000.
Yeah.
What was it netting per month?
It was about $475. About $475, $500.
Wow.
Yeah.
So
because part of that rent went, to me.
That's a 100% return on your money every year.
That's great.
Yeah. Yeah. And
more than that.
That's the whole buying and selling thing. It was actually a 1959 Spartan, which is made by an aircraft company. So I love the whole vintage trailer thing.
Nice. It seems to be kind of like a passion for you. It's that stuff, right?
It's just fun. It
is cool. Yeah. I'm somebody who feels like I should have been born in the 70s, or at least living in the 70s. So yeah, I get it. It's like a nostalgia there.
I had a question was, if you have done no deals, who are these people lending you $400,000 cash to do your first deal?
Great question.
And can we get their phone number?
Well, there are guys that were in real estate here in Austin. So they were in real estate already, and they knew the market, and they knew that what we were charging at the time, it could carry more. And it's really math. It's like numbers don't lie. Although people saw that, this loan to value ratio, it's not going to be able to carry the debt service if you don't get the rents up within a certain amount of time. These guys, I'll just tell you, these are the kind of people I deal with, and the type of person that I am. When we did our paperwork and we drew up, I had my attorney, they had their attorney, which is what I recommend anyone do when you go into a partnership. You have your own attorney. The paperwork had said 6 months, no interest. And so there wouldn't be a payment on that $375,000 for 6 months. Well, when the 6 months came up, it was time to start making those interest payments to them for their down payment, which is basically them on this side as the entity and them as the lender as well for the down payment. So, we were basically together, and the company was paying, them. So they said, well, the paperwork says accrued interest, 6 months accrued interest. And they easily could have said, oh, well, the business has it. It says accrued interest. We have to pay ourselves the accrued interest, And they said, no, we verbally said there was no interest for 6 months, so we're not doing that. That's the kind of people that I found to do this deal. Like people with integrity, people that their word. And I just believe in always operating like that too. I think it will always come back to you in a way that is tenfold blessing.
Yeah, brand is everything, and your integrity is what defines that brand most of all. Mm-hmm. I'm a history nerd, and I just discovered a big part of the reason why George Washington, one of the founding fathers of the country, of course, our first president, one of the reasons why he was, elevated and nominated, oftentimes against his own will, he was, just everyone looked up to him because he was brave in battle and he would lead by example, but also because he just was a man of integrity. Everyone knew you shake his hand, he tells you he's going to do something, he does it. I think that goes a long way,
That was my 2004 deal. I did a deal on a handshake.
Wow.
Yeah. And we ended up going to the courthouse and buying it. However, before that, we had just shook hands and a few weeks went by. More offers came in, more people. They still sold to me. Well, when I went to sell that property, I bought it for $60,000. I sold it for I put it on the market for $120,000. It's a piece of land on the lake. And I put it on the market for $120,000. I got an offer of $110,000. Someone came back and said, I will give you $120,000 for it. And I said, no. I didn't even have a contract on it for the $110,000. I said, no. I said, if this guy doesn't, yes, I will come back to you. But that same energy that came into the deal is the same energy that I carried over into it as well. And a guy ended up buying it for $110,000. I mean, it was only $10,000. Mm-hmm. I could have said, no, I'm going to go sell it to this guy for an extra 10, but like, I got to sleep at night, right?
That's great. Yeah. Wow.
Yeah. I always tell people you want to have the contracts and things in place, but if you have to enforce the contracts, you partnered with the wrong person, right. It's like, it's not good. Like Drew and I, we have multiple LLCs together, but he barely looks at anything. He doesn't even know what he's signing and stuff, but it's just, you got to have the trust to do those kind of deals. We just found out the other day that you own like 75% of the company or something.
Yeah.
We didn't even know. It was like for 2 years and then we had to change it.
Doesn't matter.
Yeah. So it's like, if you don't have the right partner, what if he says, no, I actually own 75% and the company's worth $8 million. Now you just like, it's not good. So you want to trust.
And that can happen.
Yeah.
It totally can happen. Yeah.
Yeah.
I'm not saying that people are always going to do the right thing, but I think in general, they want to. Sometimes money gets in the way, I guess. Yeah. I haven't had it happen to me yet.
Yeah. And where did you meet these people? Did you go to meetups or like events like Limitless or
I was having lunch with a friend, mm-hmm. and I told him the situation that I got told 9 times and no one's going to loan money on this and I'm going to lose the deal if my money's going hard the next day. Mm-hmm. And he said, I need to introduce you to someone. So he's the one who introduced me to a friend. And after the phone conversation, that's when he said he was actually in my trailer that night and looking at the deal. Because I was living in the trailer park. And he said, let's do it. And so I was able to let my money go hard. And then even if he had backed out, I feel like I could have found the money. I feel like I could have come up with it.
Mm-hmm.
Yeah. I mean, there's a saying that, you have the deal, like you were saying, it comes down to the numbers. You can get it funded. That's not the issue for sure.
Right.
So it sounds like you had it.
It's
interesting that they trusted you though to execute with no experience. That's the unusual part that I'm seeing. So they trusted you at the same time you trusted them.
Yes, for sure. And then I managed the property. And
nice.
And then,
but you had already had your own businesses and you were managing probably, companies.
No, I wasn't managing any multifamily or doing anything at the time.
Really? What do you think it is about you that made them just trust that you would execute and pull this off? All humility aside.
I don't really know. I mean, I think I think you can know when people are honest, you just know, like, if somebody's going to do what they say they're going to do. And when people aren't. And then you mean the fact that if I was going to allow them to be a part of it?
No, because they gave you Drew meant like they gave you money to execute on something that you don't have prior experience to, right? That's something hard to pull off.
That's the big unusual, like, wow. That's the wow.
Yeah. Well, I don't think it's that difficult what I did. I think anyone can do it. And that's hopefully your listeners are just like me who didn't know anything about what a pro forma was or what a T12 was or any of those things. And I mean, you can do it not knowing.
The listeners listening, sorry to interrupt you. Here's really what it is. They looked in your eyes and they saw that you were a person of A, integrity. They just read that about you. And B, quality. Let's just call it what it is. There are people that you meet in this world where you can quite easily, filter out who's bringing quality, who's bringing integrity to the table, which are almost the same thing, but they are different. And that's something as a business owner myself that I've gotten better at, for sure. It is a skill of reading people and of really being able to go with your gut. And as somebody who's been hiring for years now, I feel like I'm finally starting to kind of get it, knock on wood, in terms of who I'm picking and key players. Because if you get the right people in the right places, all of a sudden things start happening, and vice versa. I've made some bad choices and where things just kind of didn't work out. And I've recently learned that experience is a part of it, but more than anything, that being able to look in their eye and just feel like they're ready to put in the work. And I'm just totally talking out my butt here, but I am assuming when they met you, they saw that and they filtered that out. With anyone, with that kind of capital, they probably have gone through the hardships of hiring and firing the right and wrong people. And that's a skill set that they had that you were fortunate enough to be a part of. And that's really what it comes down to. So the lesson is, have integrity and be willing to put in the work, be a quality person that's really just ready to make it happen, put in the energy, and just in the 2 minutes we've been talking, I can already read that about you.
Oh, well, thank you. Thank you. Well, I think your motive for doing things kind of manifest in the results of any situation. So where your intentions go, your energy flows, right? And so if your motive is to just kill it, like I own this self-storage facility right now, and I'm starting to not like self-storage, not because of the money, but because of what it is. It's people hoarding their stuff.
It's what? I'm sorry?
People hoarding their stuff.
Oh, so that just the hoarding aspect it makes you uncomfortable. The whole
thing of like people barely getting by, but they're paying, for their storage facility. I've only owned it a year, so I've never owned that. I've always been into let me help somebody live affordably, in the park and make a great community for them, make it a great thing that they get to experience while they're either going through something or they're trying to save or get out of debt, all those things.
Sure.
This whole self-storage thing, what I'm hearing with like the gurus and stuff, it's like, dynamic this and pricing and like you go up and you do that. And I'm like, I don't know. I'm thinking that I'm going to get out of it. I own one facility and I'm thinking I'm going to get out of it unless I can turn it into something that is more positive, where people aren't just like, they'll go 2 or 3 months sometimes without paying, then they'll pay. But it's like, I have 7 children. All their stuff is in there. And I'm like, this is so sad to me. So I didn't know the whole self-storage industry was like that, unless you can make it industrial or commercial where people are, storing their equipment. I did have some lawn mowing companies in there at one time, and that was great. But people that are just have their stuff in there and they're paying every month, like I want to counsel them and say, hey, can I help you get rid of this stuff? I just want to put myself out of business. That's just like what I'm trying to do.
I see where you're coming from. You almost, is it like you kind of feel like you're enabling the?
Yeah, I don't know.
I
want to sit down and have a conversation with them. Like, hey, let's get on the schedule. Let's get this crap out of here.
Right.
So
Are you, well, I mean, you could have a side business where it's the whole coaching service on, it's a counseling service where, they counsel you. It's like that show Hoarders,
Dude, I got the perfect title for this episode. You guys ready?
What is it?
The title for this episode is going to be called The Ethical Investor.
There you go.
Right. Yeah. So we'll do video, meeting the people at the storage unit, and they haven't paid in 7 months. So they think they're going to lose it, but we counsel them and teach them how to process through the stuff.
You're way too nicer than me. Like I will kill everybody in your family. Get the hell out of here. Like I'm like the opposite. This is because I live in California and people take advantage of us. They like won't pay rent and then buy like 2 new cars and park it in the front. And I'm like, dude, no.
Yeah, that is a real thing. Yeah.
So we started off like, in the similar communities. We wanted to be in the C class and stuff. We literally sold everything we had in C. We only own B and A class now because that's just a space that we don't have the time to actually have that much of a heart to sit and help and coach. I don't have time for all that stuff, right? I'm going to help B class people because they keep the house clean. Their kids are going to school and they're trying to get a promotion. That's the community I want to help. I'm not interested in your story about you have 55 kids and, half of them live in storage units. I'm like over it. It's like not a good use of our time. But for you, though, it sounds like you like to help everyone.
Well, I do. I just didn't know that I was going to be giving so much. Last year. Yeah. They're paying, though. That's great. They're paying. It's paying the mortgage on it. I actually did that deal owner financed at 4% last year.
Yeah. It is a tough conundrum, actually. That's a good point. We didn't think we'll go this route, but in this conversation, it's like, when Drew and I started investing, we used to tell or preach to people all the time, like, hey, you need to do this and that. And then I quickly learned these guys are all morons and I can't waste my time with these people, right? So then we started doing podcasts and like meetups, and we will tell people, come to the meetup and if you choose to come there, we will educate you. If not, no, we will not even talk to you. You have to pay us thousands of dollars to look at you in the eye and talk to you because it's not a good use of my time because they're not going to listen. So I even my family, like I can't, like they're not going to listen. It's crazy.
Family's the worst. Yeah. That whole deal. I tried to get my dad to invest in that deal that's selling for the 8 figures in December. And he was scared to death of it.
I know. It's crazy.
He passed away in April, but before he got sick, he said, do you think your partners want to be bought out? I said, no, Dad, not at this point. They don't. And so he said, are there any other deals? And so anyway, I found him and my mom an apartment complex to invest in. So they could at least have something, so they didn't feel like that. They didn't have complete FOMO of missing out, Yeah,
that's been such an interesting journey for us as well. And just private funding, because the way that we do it is people are actual partners. Like my mom's a partner on a deal, our friends, his sister, family and friends, on the ethical side, to keep with the theme, it's amazing what we do because not talking crap on mom, but she's just not fiscally responsible. Sorry, Mom, if you're listening. She knows it. I'll tell her. We have these conversations all the time. But she blew through her retirement in a year. And thankfully, she still has something. And that is what she has with us, which is a duplex and one of the highest appreciating counties in the nation. And it feels good to know that we're at least hedging against her kind of tendencies. She just, and you know what? It's kind of sweet because some of the money that she blew through, a lot of it really was to try to help others and her family. But she just forgets to take care of herself and fill her own cup. Oxygen mask on herself first. Point is, it's really a blessing of what you do, of what we do, just on the foundational level of the insane windfalls and successes, the easy wins of owning and controlling something that goes up in value every single day. And in Austin, I can only imagine. What year did you get started in Austin, by the way?
2015.
Oh yeah. So you've been riding this huge spike this past 8 years?
Yeah. Yeah. And if I didn't have the entrepreneurial ADD, I probably would own more, but I got a little sidetracked.
I too suffer. Hi, my name is Andrew McCormick, and I have a new business idea every single day.
Oh, I'm making tallow lotion this weekend.
I feel so good because
she seems more advanced than you.
Yeah, she's way I invented a lotion. Yeah. I'm like, maybe not. I'm not at that level. But yeah, it's a thing. It's totally something I have to resist all the time. And that's why, I do real estate, and I've been staying with it for 5 years though, because it's something that just works, even if you mess it up. In our first deal, anyone's listening who's been a repeat listener, Quincy, we made a lot of mistakes and we walked away with a huge lump sum of it wasn't that bad, I guess. And that's what's kept me in this game as long as it has, because the appreciation covers up any mistakes that you make. And lately, we've been really doubling down on cash flow in red states. So the reason why I'm bringing all this up, and I'm sorry I'm hogging the mic right now, but I'm going to speak selfishly. Right now, my big thing for the next 5 years is to find something with appreciation, preferably cash flow potential of 1,000 per door net, or at least close to it. Obviously with the tax benefits and lifestyle. So we bought something in Nashville. We closed today. I'm so excited.
Oh, wow.
And we can now, lifestyle wise, go out and visit that city, bring friends, bring partners, bring, whatever, bring you out. Let's go hang out in Nashville for a weekend, and we can, because it's a furnished rental, we can now host you for free. Don't worry about it. Have a good time. I love that we're on that path now where I can help take care of my family, even if they have no money, which a lot of them don't. It's no, it's free. It literally is costing me nothing. I'm not even losing because it's already netting so much more is the idea. And sorry, I'm finally getting to my final point. I really would love to have something in Austin. I love that city so much. What advice would you give the listeners to get involved in that market? Are there towns outside that you would recommend? Are there certain regulations passing that you would say, make sure you're watching for this? What's the good, the bad, the ugly? Have you thought about investing in real estate and taking advantage of all of those benefits without any of the work? That is something that OnV Invest not only provides, but has been providing since its inception. With friends and family, we have built an empire and a system of a wealth generating tool that is giving us and our friends and family that leverage in their life to create true wealth. Go to onvinvest.com for more to see if you qualify. And thanks for listening.
Yeah, just let me, you find the deal, I'll go look at it, or let me find you a deal. I'll bring something to you. I love doing that.
Awesome. Okay. Yeah, I'll hold you to.
There are some things that are changing here. One of the things that is changing is that the annexation. So they cannot annex extraterritorial jurisdiction properties without there's a ton of regulations going on with that. So they can't just go and annex it into the city. So Austin's growing so fast that they cannot provide the services that they need if they were going to annex something in. Plus our police force is really lacking right now. I think because of that, and because of there is a little bit of an increase in crime that's happening, that the property values are going to drop some. And then everyone says, oh, well, property taxes are so high in Texas. They're really not. It's just the valuation of the property is high. So you get, that's where it seems like it's so much. But there are smaller pockets that are lower tax bracket, they're lower rates, they're a good area. The property that I'm selling, because of where it is, I actually owned 1 acre down the street. It's called an extraterritorial jurisdiction. So there's no restrictions, impervious covers higher. So you've got to look at what can be done there. So if you only have 25% impervious cover, you're not going to be able to build much, develop much, or do anything. Well, there is a new thing passing where they're not going to require as many parking spaces as they used to. Granted, it's going to be hard to build something without parking because everybody has a car. So yeah, you can build more units, but they're probably going to want a parking spot.
Yep.
They're trying to make it more public transportation, 15-minute cities kind of thing. So if you have no restrictions on a property, then there's more opportunity there to get more per door. Does that make sense? So if you're going to build a 100-unit apartment complex, you can, instead of 30,000, you might be able to get 50,000 a door if you're selling the property as a development.
Wow, that's interesting. And you mentioned the property taxes were not actually high. I thought property taxes were like the highest in the nation in the state of Texas. Is that not right?
I mean, I haven't found that. When I look at other people's property, it may be because they're the way that y'all do it and they do it in California. It doesn't seem to me that it's any higher once you add it up. It's the rate. I think they're saying that the rate is higher, but if the valuation is lower, it all kind of equals out, and it doesn't seem to be as bad as like what I've seen in California.
Yeah, just the way they assess the properties and millage rate and stuff. But, it's more than state. What you really want to know is you want to look up counties and zip codes. That's where you get host. California is 1%, right? But my houses, we have houses in Costa Mesa, Orange County is 1.25% because the state, the schools and the water service, they add stuff. Bakersfield, which is Kern County, we had properties there. That's where we started. That's 2%.
Yeah.
Right?
We have no state income tax either.
So, and then we bought this house in this duplex in Stone Mountain.
Oh,
Stone Mountain, Georgia, which is DeKalb County. Anybody who's listening, worst garbage county in the world. It was 4% property tax. And I was like, what? How is this legal? They're like, yeah, you bought the house, you're screwed. So we held on to it for 2 years and it was like 3.7, 3.8%. And then, we sold it, we made a profit on it, but it couldn't cash flow. It was so high.
The lesson is, for the listeners, is do your due diligence. Yeah. And part of that is knowing the actual rate you're going to be paying, not just the state, but the municipality, the county.
Yeah. And they'll also have these little areas where they'll develop a new housing and the houses will be $300,000. Well, then it's called a mud district. So their taxes end up being 3 or 4% because what the cities and the counties do with developers here is that they don't want to pay for the roads going to the new neighborhood being developed. So the developer will say, okay, if you approve my permits and you allow me to do this, then I will build the roads and I will do the infrastructure. I will provide the gas. I'll provide the water. Well, I have a friend who lived over in a neighborhood that was built like that, and they pay their own water bill. They got a letter saying they were going to get fined if they used any more water than what they were using. They had like a 4,500 square foot house, and they were paying $200 a month in water. And they said, we're going to fine you because you're using too much water, because it's a mud district. So they have a reserve of water. They provide water to the community. And then they also have underground propane lines. So they have a huge propane storage tank. So they're basically, providing utilities to these neighborhoods. Well, so the trade-out is they have to recoup those costs for building all that infrastructure. And they do that through your mud tax, your municipal something, I don't know what that stands for.
Utility something.
Yeah. So that's how they get you. So you can look at a house, it might be $300,000 or $400,000, but it's developed in a mud district. So that's why your taxes are higher. So
I've never heard of this term mud district. Is that what you're saying?
Mud, M-U-D.
M-U-D, mud district. What does that stand for?
Yeah, that's what.
Utility district, municipal.
Oh, okay.
Something like that. So they have a mud tax on.
Is that only a thing in Texas or is that a California? I don't know anything. I've never heard that.
I don't know. It's a trade-off that they do when they want to develop in an area and there's no infrastructure for that area.
Yeah, like we have, what is it called? Delarose or something? Melrose or something.
Yeah.
They have those with the newer properties. Like the DeKalb County in Georgia I was talking about, just the public school is 1% of the purchase price or what they evaluate the property as. Then you have to pay property tax.
You're saying there's an additional tax of 1% based on something they made up.
No, for the public schools, that's what it is.
Cool.
And then you got to pay the additional taxes, which is so crazy. Homework. I remember calling the assessor. I'm like, bro, I have 2 Section 8 tenants. They ain't got no kids, bro. They're like, sir, that's not how this works. They did. He
No.
did. He was nice enough. He did reduce my taxes, though. I was like pleading with him. He was like, okay.
Well, I homeschooled my kid and up until this year, and I continued to pay those school taxes that whole time. But
that was a mistake that we've made in analyzing deals in the past, is underestimating what we'd actually be paying. All the extra little fees and all that. Right. What are some mistakes that you've made along the way, and that you're, if you could say something right now that would help somebody on their journey, what would that be?
Get a really, really good CPA and a really good real estate attorney and a really good estate planner.
Good team.
Down the street from that one property that's closing in December, I sold a property. Everyone thought I was crazy. I paid $7 a square foot for raw land. It was 1 acre. I sold it for $24 a square foot. Well, I created my own opportunity zone fund, and I already had it under contract. I was buying an RV park and storage facility in an opportunity zone. I was going to develop it, get those taxes gone in 10 years. Well, apparently, because the property that I was selling, I didn't do one single improvement to it. This is a $250,000 mistake. Because I didn't do any improvements to it, I was supposed to designate the property that I was going to purchase within 6 months of the sale date, typically within a qualified opportunity zone, which is what I'm having to do with this deal because my partners and I are not 1031 exchanging. It's too late to do tenants in common, so we're not even going to mess with that. So we're all going to take our money personally. You can go and take that into a qualified opportunity zone if it's an improved property that you're selling, and then you have from the end of the year. So I had sold that November 21st, so I thought I had 180 days from that. Well, one day before closing, my estate planner and my CPA were on the phone together, and my CPA was like, "Oh, it's raw land." And the estate planner said, "Oh, no, you can't do it." So I had missed my window. I'd already had it under contract. I had missed my window by 30 days. But if I'd have known that, I could have closed sooner and bought that property in the qualified opportunity zone fund and then reinvested the value of the structures into the property. That's how you get those taxes. They're not just deferred. They're under current tax law. You don't have to pay them no capital gains after 10 years. So yeah, that was probably the biggest mistake. That cost me $34,000 in taxes.
Oh, that's significant.
Yeah. Kind of made me sick to my stomach.
Yeah.
So.
Yeah. That's how we write a lot of, all of our deals are tenants in commons, and we do 1031. So everybody can go like their own route if we have to, and different. So we have a lot of exit options. But yeah, the opportunity zone, that's the only tax loophole, if you will, is to not, like she mentioned, not defer, but you can actually get forgiven. Like there will be no taxes if you hold it for long enough.
You said 10 years.
10 years, right?
Great thing, because the reason why it's called an opportunity zone, I've seen a couple of gurus out there call it opportunistic. I'm like, yeah, that's an opportunistic if you're an opportunistic person, but it's not about you. It's about creating an opportunity for that community.
Yeah.
So like I was buying in this community where it's going to be an opportunity for those people to live affordably. I was going to invest money into this property where people could have a place to live affordably, $700 a month.
And that right there is why people get so worked up and kind of almost enraged when they find out how little, people pay in taxes, such as us, or the Trumps or the whatever, anyone in the real estate game. And we, as real estate investors, of course, know that that's perfectly legal. It's just simply the way the code is written, and it's written that way for a reason. It is to incentivize people like us are willing to stick our necks out there, do the due diligence, do the research, make the inevitable mistake or two along the way. And no deal is ever smooth and easy and not stressful. It's always something. And that's why that there are those, especially with opportunity zones, because you're creating value out of nothing, out of sheer will. And I think it's important to kind of emphasize that. That's why there are so many great tax incentives and just programs like what you're
That's $250,000 of social capital that I could have used to help that impoverished community.
Yeah, that's unfortunate. It's really sad.
Yeah.
Yeah.
Is there no way to have an appeal, or is there a?
I
don't know. It's probably too late. Yeah.
Find me a good tax guy. Maybe I can figure it out. That's why
been part of.
That's why I bid $6,500 on that whole. I'm like, cost $7,000 just to set up a trust. So sure, I'll pay $6,500 for some tax advice and whatever they can help me with. I'm hoping somebody there can help me.
I use Mark Kohler. He spoke on stage. He's my attorney. He doesn't charge $7,000. I can introduce you to him if you want for the revocable living trust. But going back on the ethical side of the stuff that we're talking about, what's interesting is I want to share this, so you guys might have some opinions about this. Is I was talking to some friends I know, and they were always like, buying so many houses, it's not ethical. You're taking away, houses from, people who can buy and whatever, right? So I asked him, so where do you currently rent? And he said, I rent at this big apartment complex. I said, do you know who owns that one? I said, BlackRock owns your apartment building. Do you know who owns BlackRock? They're $1 trillion company. So you are complaining that I'm buying property with my friends who actually work here, and they make less than you, and I'm sharing this wealth with multiple people. So I want ownership in US, right? So doing this big stuff where they talk about, own nothing, be happy, is actually promoted by these big companies who own everything. So what you're actually saying is to actually give money to these super uber rich people, whereas I'm actually trying to redistribute wealth to regular middle class Americans, right? So it is so interesting, how skewed people think. They don't really understand what's happening. They're literally saying, oh, you should do this, and they're actually literally giving hundreds of thousands of dollars to BlackRock every year. It's crazy.
Yep.
Well, and where does it say? Where's the manual that says that buying and owning a home is the right thing to do? The house I'm in right now, I rent. The house I own, it gets rented out. I'm not, my assets pay for my lifestyle. Yeah. I'm not working a job and in hours and stuff so I can afford a liability. I don't want a liability in a home. I want that house to make me money.
Yeah.
Let's stop right there, because we could easily blow past this because we understand. We've read those books that tell you to do what you're doing, by the way. But why make your case for those that might be confused as somebody who owns all this real estate? Why would you rent?
And then we can debate for the next 10 minutes.
Yeah, let's go.
Well, for me personally, I like living in a $4 million home that I don't have $800,000 in cash tied up into, and then a $20,000 a month mortgage. I want to live in a nice house.
So opportunity cost, taking that $800,000 and making it work in another asset class to make you way more money, and simply paying a little fee, if you will, or rent per month instead.
Exactly. So, and then having the home that I own bring in $30,000 a month that is way more than the rent that I'm paying. And then all my other assets that produce income as well, that I could take distributions from, refile and roll. I call it stacking. You can stack all these different things in your life and, have the same, especially the number one thing I think that people don't get is that you can have the same dollar working for you in two places at the same time, making you money.
Yeah.
And so we can go a little bit deeper in that. Yeah, I rent here, but I also have assets that are purchased with money that's compounding, growing, borrowed with a simple interest, and then used to buy an asset that pays that loan back and pays for my lifestyle.
Okay. So I'm going to have everybody speak. So next, so you're a little bit too advanced. That's nobody. We don't live. Both our houses combined is not $4 million, right? It's probably half of that. But that's a good strategy for your level. So you're saying. So I will ask you follow up with this. So do you think buying your primary residence is not a good option for most Americans, or what would you say?
I think if you do, but if you have an asset that will pay for that, But if you can have that and it can make you more money than renting it out as a short-term rental, then I think that's the smarter way to go, because I mean, it's an asset. Just, you don't want something that's going to continue. I mean, like, can you imagine the maintenance? I mean, I had 2 air conditioners go out just in the last week here. I don't have to worry about any of that. I don't have to worry about, things aging and breaking, the water, like I don't have to pay the taxes on this thing. That's the beauty of renting it. And I get to live in a fabulous place. And, I'm not to the billionaire level. Maybe billionaires buy their houses and they live in them. I don't know. But I even think even if I was a billionaire, I don't think I would still do it. I think I would still go for the cash flow.
Yeah. That's okay. So that's interesting. I'll get back to you. What do you think? What is your opinion?
Well, it's, our strategy, not to make this about us, but is kind of an in-between where we both live in $1 million homes that have separate attached ADUs. And then maybe a roommate, right? Because we're still, young guys, and I'm never home anyway. But yeah, and it takes, at least for me, I pay a little bit more typically than I would in where I was staying before, the 1 bedroom, 1 bath across the way, a little apartment. I'll pay a little bit more, but I'll have a giant $1 million asset that is being mostly paid down through the Airbnb, through running it and operating it in that way. So I kind of get the best of both worlds.
That's great.
That's the way that, because I'm going to pay rent anyway. And that's the way I kind of like mathed it out in my head. Well, I'll pay a little bit more in rent, I guess, or out of pocket for this home that I actually emotionally freaking I was so excited walking it. And I actually do really love, I get to host our business dinners, Father's Day, holidays. It's a big thing now. And it's at my house. I love that. For me, it always comes down to how can I get the family more, that's been such a big part of my motivation. So that's how we run it. He's got an ADU literally behind this wall and I've got one above my house, above the garage. And so we kind of have a middle way.
Yeah.
Makes sense.
Well, my husband woun't go for that. He doesn't. We're on 21 acres and he likes his privacy.
Yeah, totally.
And he doesn't want to have to deal with anyone. So that wouldn't go over. So I had to come up with a different plan.
Yeah.
Although I said, hey, let's live in the back of our property. I said, let's put an Airstream back there. We'll live in the
of course
back.
You did. Yeah.
We'll rent it,
You're such a boss.
Yeah. And I said, we'll have a couple other, trailers back there, vintage trailers, and, we'll rent them out. And he goes, no, I do not want to see anybody in the morning. I said, okay.
Yeah. Yeah. So that's
that income on top of everything else. That was one thing I had to compromise on.
Yeah. So going full circle on this, I know you guys have to go, is I would say this is what, so based on like math and numbers and stuff, because I'm super nerdy about these things. So for most people, like almost most Americans, the biggest amount of wealth that they have is in their home that they pay off. That's like so far skewed. It's a joke. Everything else that they own is like worth garbage. Like that's how the difference is, right? So now what Erica's talking about is like more advanced, like you have assets that's paying stuff and then you're using that money to pay for your rent. You're not working 9 to 5 just to make the mortgage because you can't do anything else, right? So that's different. So what we see is most people who we meet, they say, we're saving to buy our first house. It's going to be the mansion in Newport Beach. And I literally look them in their face and say, you will never buy that. Like I would bet all my houses that you will never do this in your entire life because you just like to lie to yourself. That's not going to happen because you cannot save your way to buy a $3 million freaking home. What do you mean? You're going to save $1 million in cash? You make $100,000. Like, no.
And also, unless your income is going up every year,
it's not going to work.
Better than the rate of appreciation in one of the highest appreciating counties of all time.
So it's not going to work. So what I usually tell them is you have to sacrifice something. You either have to work harder and make a lot more money, open a music school, or buy a trailer park, do that. Or you have to sacrifice like me. Like I live in $1 million house, but I have a roommate and I also have an Airbnb. It doesn't bother me. I like them. It's a good time, and then I can do that. But then most people will be like, "Oh, I don't like roommates," and I'm like, "But you live in your mom's basement. Like, what do you mean you don't like roommates? You need a roommate. Like, it doesn't make sense." So you got to pick and choose like what battles you want to fight. But I would say for most people, if they're young, they don't have kids and husband and wife, or even if you do, I would say save 5%, 10%, buy a house, rent out the rooms, or buy a duplex. That's the easiest way to leverage your way, because either you like it or not, US is going to print more money and they will make your money worth less every year. They come out and go on stage and say, "Hey guys, we're trying to devalue your money by 9% this year. Okay, thank you for coming." And then they leave. Right. And then everybody's like, "Oh yeah, I'm going to go watch a movie." I'm like, did you not hear what Powell just said? He literally said he's going to devalue your money you just made. This is crazy.
Right. I mean, it's going up again. Rates are going to go up again. Yeah, so that people, you have to position yourself in this kind of economy to be your own banker, to provide your own, to either have someone who's got the finances to do it, partner with someone, or you're not going to be able to get any money from a bank, and it's not going to be at a rate where you can cash flow.
Yeah. So what would you say for listeners who are listening? We're recording this end of June, probably come out in July or August, 2023. What do you tell the listeners? Hey, the interest rate's at 7%. Prices are too high. Should I wait another 50 years when it's a good time to buy, or should I buy now and roll the dice? Like, what's your recommendation?
I would say learn everything you can about the niche deals that you want to purchase. Mm-hmm. So if it's trailer parks, or if it's single family, if it's short term, Airbnb. I have an Airbnb in the mountains in New Mexico. That's what you want. Then you find those deals, you learn how to see deals, learn how to find the deals, and then find someone with money to go in, and then you can give up the equity. Do what I did. You don't have to have money to do your first deal. You can still buy deals. And especially right now, people that like myself who are going to be looking for investments when the market turns, because they're going to start hurting. I did a deal with a guy who was about to lose his home. And I said, "Look, you're about to lose your home. It's going to go into, it's already in foreclosure because you did the forbearance." I said, "You got all these penalties. You're going to have a foreclosure on your credit." And I said, "You're not ever going to be able to buy a home for a long time." And I said, "Let me help you." I said, "Deed it over to me. Let me pay those fees for you. The mortgage will stay in your name. I'll just keep making the payments for you, and we'll rent it out. We'll keep your credit going until either we decide to sell it or rent it. Right now, it's just a rental, and his credit is staying good, but the deed is, I own the home. So I paid like $18,000 for this house. And yeah, it's in his name, but he's not going to go try and buy another home. And if he does, then it's going to say he already has a mortgage, but he's already agreed with the paperwork and stuff that, the mortgage would stay in his name. And those kinds of things are going to happen. I don't know what that's called, but you can help.
Subject to, right?
Okay. Yeah, I think so. So you can help people during this time when things get bad. You can help people not ruin their credit and ruin their financial life forever, but it also can help you too, and so I think finding those deals, finding people that are, looking to get out of their home, homes that are sitting on the market for a long time. Those are like, who knows? I go and look at homes and I ask the realtor, so do the people live here? Like, I'm trying to get information about, what's going on. There's one in my neighborhood. It's for sale for like $1.5 million. And I went and looked at it and asked questions about it, wondering, what's the story with these people? Are they moving? Do they have to move? Or, there's certain questions you can ask and you can deduct if they're financially in trouble, and offer up help. So if you don't have the money to help with that deal, find someone who does. If the numbers work, then numbers don't lie. So it's going to be a good deal for an investor. And then of course, interest rates will come back down. But if you can use somebody else's money, whether it's from a bank or an investor, that's great. But sometimes you can use your own money, and having those have your money in tier 1 assets. Some people use retirement plans. I use whole life insurance policies, non-recognition. So I'm my own banker. I actually loan money out like a bank. And so there are people like me who are going to look during these times for opportunities to help people during, because that's really what's going to happen over the next 6 to 9 months. I think we're going to see a lot of people really struggling with the mortgages that they got at a higher interest rate because their money is not going very far.
Yeah. I love the book, 7 Habits of Highly Effective People. The big takeaway from me was win-win, create win-win scenarios for success. And that's literally, I think, your whole MO. And I love that. And you're just focused on how can I provide this person value. But at the same time, there's something that I think the audience maybe has kind of caught on to by this point. I know I have. You are very, very well read. You are very, very smart. So I want to make a point to anyone listening that you got to educate yourself wildly. And I'm getting the feeling now that even in your first deal, you had probably read a few things that had helped you to at least speak the language and to have a better understanding to get that vote of confidence from these people bringing in, what was it, 300,000-400,000 for your first deal. That's, I mean, you're very casual. You don't even know it, but you're very smart. And I would love to know what are some of those big game-changing books for you, with the exception of the Purple Book, the real estate go-to Bible. What other books would you recommend to anyone trying to do what you're doing?
Well, you just said it, the Bible.
The Bible itself.
You said other than that.
Yeah. Give me some, what are some of those books you're like, wow, no one knows about this one. I don't know why. And this one changed my life. Is there anything like that?
Gosh, I know what they are, but I read them. So the Enneagram.
Okay. Nice.
The Enneagram book. Love that book.
Can you say that one more time? Because I usually will hear these recommendations and know it right away. I've never heard of that in my life.
It's called the Enneagram.
Enneagram. Okay.
Mm-hmm. And that's helps you understand yourself. And I think in all of this, if you don't understand yourself and what really makes you tick and what makes you want to do this, then it won't be fulfilling. It won't be sustainable. You won't enjoy doing it and you won't be successful at it. I mean,
love it.
I'm a 3 on the Enneagram, and I don't lose. I win.
What is a 3? What does that mean for me and for the audience?
You just you've got to be number one in everything, win everything. I was a Division I athlete, so I have the whole background of just, making sure that I did everything I could to win. And I think that comes over into the real estate world because I want to make the right decisions, because if I don't make the right decision and I don't know the everything about it, then I'm not going to win. And what I mean by win is I just don't want to lose all my money. I want to be able to eat and live and take care of my family and but that book helps you understand what drives you. So you kind of understand, and you may find out that real estate isn't even what you want to do. It doesn't fulfill you. It doesn't get you off the couch. And once you discover that, then it's a lot easier to go into the direction of living a fulfilled life and also getting paid to do it.
Right.
And so that's one. I'll have to get a list together. If I get a list together, I can.
Yeah, no, I put you on the spot.
No, it's okay. I should be able to share those pretty easily, but I haven't been asked that, so it's not on top.
It's been a big contributor to our success. This guy's read like all the real estate books. I've read a good amount, and yeah, it's just such a nuanced niche thing, and there's so many ways to go wrong because there's so many moving parts. That, in my opinion, the more you can educate yourself, the more you can hedge against those mistakes. As simple as that, as well as an entrepreneur as well. Books like Traction and what is it? My brain's
Who Not How?
Who Not How is great. Yeah, that's a big one.
It's Dan Sullivan.
Dan Sullivan. Yeah, there's another one, the E-Myth. That's like the big. That's like, those are books that really helped me to go from like, all right, well, I'm teaching guitar to like, well, how can I leverage this skill and compound that into a whole thing where I can now reach 200 students rather than like the 30 on my roster. So I'm able to touch more lives, bring quality to more people and stand to benefit more financially, in creating the win-win. And that, it's a couple books that helped me to kind of see that picture. So
yeah, I'd love your list too. I'd like you to send me your list.
I will. Yeah. I mean, just those three right off the bat, rattle them off: traction, E-Myth, and who, not how are, I think, musts for entrepreneurs. Something I would say though, is also, this is such an unsexy secret of the entrepreneur world, and that is marketing. I think a big part of the reason why most realtors, I'm a realtor as well, fail and just give up in the first year is because you're your own business. And unless you have marketing skills in any business, I mean, you're good luck, a lot, especially up front. You've got to be able to put it out there. You could have the best product or service in the world. If no one knows about it, it doesn't matter anyway. And so I think that's a huge advantage. And that's something that I'm just now really starting to educate myself on. I still hire people out who know way more about Google AdWords than I will ever be able to research. I get into the weeds of it and I'm just like, my brain fries. But the point is knowing about marketing and psychology of how people work and tick has been a big help for me on every level.
I know nothing about marketing.
Oh yeah. I mean that
you don't need it. That's why you don't know.
Yeah. I said, my husband and I actually have a radio show. He's like, well, where is it? I said, I don't know. They just recorded.
Oh, that's.
It's
you
about
need to talk to your PR person for sure on that radio show.
Marriage and life. And, I was telling Vince one time someone called and said, like, our friends called us, are y'all going to stay married? I was like, yeah, we are. Oh, so I have no idea where it goes. I'll tell you though, at first I wanted to do it. We did YouTube. I was like, yeah, we'll do it on YouTube. We'll stream on Facebook. And then I just felt led to not do either one of those. And it was just going to be on the radio station. I was like, I thought about doing that. I was like, no, that doesn't feel good. I just wanted to be, it's going to fall on the ears of the people who need to hear it. Yeah. And I just had faith that was what was going to happen. So we get a lot of messages like email. Okay. Because on there we'll say, or they'll find us somehow on Facebook. I have no idea, but
that's funny. Yeah, we're much pressure to this, and we want to grow. We have you guys are already made it, and you chilling, you're buying a few more here and there. We're trying to do push-ups and buy properties at the same time, and doing crazy stuff. So we have to be out there.
Yeah. I don't think everyone can do that. You guys have a skill and you're good at it, but I don't think everyone can do that, nor do they want to do that. That's the hard part. You don't have to do that.
I do like what you're saying about it didn't feel good to you. I think that's important to lean into that and to be like, this doesn't feel like I need to do this, And at the same time, I would say if you do feel like, this is not what I want to be doing, hire that out. If there's an end goal where that helps you to get there without doing that. Stuff
it needs to be done for sure.
Yeah. Every time I get into the weeds and I do some admin work at my music school, within an hour, I'm like, oh, I hate this so much. I hate it so much. Yeah. So I'm very grateful for my staff. But back to you though, definitely have been enjoying the conversation. Before we wrap, because I don't know if you've got to go here pretty soon. I always love to kind of get a bit of a deal breakdown. And I know we've kind of done that a little bit. Maybe a recent deal where you had to overcome a certain challenge, or there was a teachable moment in that deal. Is there anything that comes to mind?
I would say that raw land that I sold. So I had a ton of equity in it. And one of the things, now this wasn't a mistake, but it was an opportunity to kind of build on the wealth strategies that I try to do. So with having that ton of equity in it, I went to the bank and I borrowed on that property, got that equity. I put it into a tier 1 asset. And then I borrowed it out of the tier 1 asset as well. Went and invested in another asset that was going to pay back both of those loans and still cash flow at the same time. But why did I do that? Because I was trying to create another tier one asset that was tax advantaged under current tax law, that was going to leave my family generational wealth tax free. So that's one of the things that as a learning moment. Prior to that, I purchased my home with $90,000 down cash. That property I had paid $120,000 cash. So anytime you pay cash for something, there is an opportunity lost there. So if you use your money in a way like the banks do and you basically are operating fractional banking within your own financial system at home, then that's how you build generational wealth. And that's how you keep stacking and keep stacking to build the wealth that can make a difference. Every day, not every day, it feels like every day, because my son's 16, I keep asking him, what is it you're passionate about? What is it that you want to do? Because I have, things that I'm passionate about, and we're about to set up a nonprofit. We had one a couple of years ago, but some things happened and we didn't move forward with it, but we're about to set up one. And it's one that I want to pass on to him. It's not a private family foundation, but it's very similar to that. And I think setting up your business with the intention of the legacy that you really want to leave, if you start out with that, it's going to be so much more fun, because that that's what you're working towards.
That's your why.
Yeah. You asked me earlier, Simon Sinek, I love him. I love all of the things that he talks about, the why behind the why. Yes, I am so driven to go make money and win and all of that. But the why behind that is maybe I didn't feel good enough growing up, or maybe I'm trying to prove something, or maybe these self-analyzation questions that you have when you're in business can really help you work through your motives for doing it. Because I could go and I could just dynamic pricing on those storage units and get the most for this person moving in and that person moving out and just killing it. But that's not going to be as fulfilling as, my reason for why I even bought it, So I think you'll fail. I think a lot of people fail in that regard because there's just their intentions, results don't lie. So basically the results that are going to come of that is, my philosophy is, am I improving someone's life? Am I making them happier? And am I happy about what I'm doing? And if I can mark those three things off the box, then I know that I'm in the right space emotionally when I'm doing something. But financially, you were wanting to know financially, what are some, things that I could have done differently? Well, don't pay cash for anything. I just, people say, oh, well, do you pay cash for a car? Well, yeah, you can have a tier one asset that pays cash for a car, or you could have a tier one asset that pays cash for an asset that pays for the car. And I'm willing to teach people that. I will share that information. It is out there. It's not proprietary knowledge.
And you've kind of touched on it, but can you explain what a tier one asset is?
So banks are required to have tier one assets on their books. So if you go and you do your balance sheet, your financial statement for a bank, they always ask you if you have a cash value life insurance policy, right? Yeah. That's always one of the lines. They want to know the value of it, because you can collateralize that to borrow money.
Yeah, I already do that. Sorry.
Yeah, so whole life. By the way, we should just plug that episode that we did.
We have an episode with Chris Noggle. I don't know if you know him. He does Money Multiplier. He's one of the biggest high cash value whole life insurance policy stuff. Yeah.
Okay. Yeah. So basically, that's what it
Brett
is.
Kessler. Brett Kessler worked with the OG guy. Who was that guy who did the first one, the book, the Infinite Banking book?
Nelson Nash.
Yeah, Nelson Nash.
Yeah.
So Brett Kessler worked with Nelson. Yeah.
And see, people don't talk about those policies because there's really no money to be made in them. There's hardly any commissions on them.
Yep.
People don't sell them, especially. And so I got screwed over big time with someone writing a policy for me. So what did I do? I went and became an independent banker, got my own license to write my own policies and write them for my friends. Cause I'm like, nobody's going to screw my friends over because I know how to do it now,
Yes.
So I'm like, not going to let that happen to them. The same thing that happened to me. But that tier one asset is
So
your bank.
So the cash value is one, like, can you use like leverage on your, like you can count all the equity you have in your portfolio. Maybe that's a tier one asset too, and borrow money against that. Is that a thing?
With the bank, I would imagine, but I don't know if there are. Now the life insurance policies, those are on their balance sheet as solid investments. I don't know what the central banks determine as a tier one asset other than those cash value life insurance policies on the bank's own balance sheet.
I see. Yeah. Okay.
They have to have them on their balance sheet.
Okay, cool.
Mm-hmm. Yeah.
Nice. Is there anything else, Sarah? Or did you want to say anything else?
Do what?
Did you want to say something else?
I was going to ask you if that answered your question, Andrew.
Did.
Yeah.
I'm just like, I'm such an abstract person. I'm over here thinking like all the takeaways, I mean, your big the takeaway that I'm getting from this, and hopefully the audience is listening, is, you definitely have educated yourself beyond a normal person. Let's just start with that. So you don't know what you don't know. And I feel like every book I read, especially about real estate or business, the more I realize I don't know. I'm like, oh my God, there's a whole different thing. Yeah. So I say always be educating yourself through podcasts, through books, through mentorships. Invest in yourself. We just had a nice little dinner last night, and probably have some nice size equity partners, pretty good chunk. And something that we had told them, because they just had a family member pass away, so they just came into a bunch of money, and they don't know what to do. One of the things I said is you think about, definitely do real estate, of course, to make it work for you, but also take some of that and invest in yourself. And by that I meant education, mentorships, like I was saying, or in your own business or something. If whatever you're pulled to do, take a chance on it. And I think a big part of the reason why I was able to make a successful music school was because I loved it so much that even when I'd go through challenges, hardships, at no point was I like, well, this is just not going to work out then. It just wasn't even, it's not something I did, it's something that I was.
Yeah.
And I think that's one of the biggest, if not the biggest takeaway from this particular podcast with you, is you keep bringing it back down to, how does it make me feel? How can I help somebody and create that win-win? And I really love that. It's been very enjoyable to kind of get to know. That's so awesome that that's been your path. And it's so inspirational, especially because there are so many people out there, many of my broke family members. Again, I love you guys. They think that to create wealth, to get, quote, rich, to have financial freedom, you must step on somebody or hurt someone, and it's unfortunate. And I love that you are such a shining example of how it can be done without having to step on the neck of somebody. So thank you for being an inspiration to whoever's listening. You've been inspiring to me for sure.
Well, thank you too. I know you and I both have the same why. So it's easy to talk about this because wanting that freedom and having that financial freedom to really make an impact on the world. I know that's part of your why. And so it's easy to talk to you about it.
Yeah. Yeah. It's been fun. Vince, you got anything, brother?
No, I think we're good. I don't want to keep her for long, but I know, Erica, you're like hiding online. So how do people get a hold of you?
Mm-hmm. Well, I have something special for your listeners.
Okay.
So I have something free I want to give them. It's, I think, part of being well in life is being healthy. So I have a free 12-week exercise program for them to
nice.
download. So they just have to text a word to a number and then they can download it. And it'll send them a little message. It's thank you for listening to the Omni Invest podcast. And they can just text the word men to 512-270-2037 and women So they'll get the men's for the men and women for the women. They'll get a specific workout. And it's just a little thing I keep in a Dropbox to give people for free. So it's just
That's awesome.
workout.
We'll text it to you. I want this 12-week program.
Yeah.
Yeah.
It's just a little PDF and it's exercises and stuff. So it'll be
Nice. Does it do nutrition too or just exercises?
I can't remember if it does nutrition on there. There might be some nutritional.
Okay. Sounds good.
And then also I, on my website, ericasherwood.com, there's a link where you can book a 15-minute call with me and I will ask you some questions about your why and help anybody who wants to, learn what I know, learn what I've learned. I'll teach anyone anything. I'm not selling any courses or anything like that. I'm just giving away what I know for free. And hopefully somebody that's listening is working on their first deal and they're scared, and I can encourage them to follow through and do it. And it's a good deal or not, and bring them back to you guys and say, hey, here's somebody that just needs a little push and encouragement.
Yeah, that's awesome. I find it so fascinating. Like people like on your level will offer like 15, 20, 30-minute free phone call and nobody will take it. I'm like, are you guys like crazy? Like, it's like insane. I don't understand like how, like why.
And what's funny is most of the people that I've been honored to have lunches with who have really created something special usually have. It's always like, well, I just talk to a guy and I learn a thing and all of a sudden, boom.
Curiosity, right?
Yeah.
Yeah. Well,
Thank
if
you.
you guys have someone that you think I could help or, could benefit from anything then they need to be, whether it's health or fitness or anything. I mean, I'm happy to share all of the stuff that I know and happy to help your team in whatever I can and add value and help create that community that you guys are starting to create.
Let's do it. Let's go buy some stuff in Nashville.
Mm-hmm.
Yeah.
Yeah. I was in Nashville. I spoke at a Jake and Gino event in 2000. When was that? They had me come in and talk to them about that tier 1 asset strategy. So now they have it.
Was it last year? I was there last couple of years.
No, it was it was 2000. It's like 3 years ago.
I know those guys. Gino was on the podcast too.
Oh, cool. Okay.
I sang opera on our podcast. It was the best.
Good. I had gone there and
last year he surprised us and he bought Vanilla Ice. And then he did like a show for the VIP people. And then it was insane.
Step up from having me as a speaker for sure.
And I didn't know that Vanilla Ice has a TV show where he fixes stuff. He's a licensed general contractor.
Real estate guy.
Oh, yeah, that's right. Yeah, I've seen
you got
that.
one hit. You got to do something. Channel that. Make that cash and,
Yeah.
All right. Well, thank you so much.
Thanks, Erica. Yeah, we'll keep in touch. We'll do something. Yeah.
Perfect. Thank you, guys.
Yeah. See ya.
Take care.
Bye.
I don't know about you, but I definitely like to see 5-star reviews on any service or any product before I purchase. Please take a second to leave us a 5-star review, whether you're listening to it on Apple, iTunes, or Spotify, or whatever platform. Take a second, goes a long way, helps us a lot to grow the channel, and thanks for listening.